And we are live. And we're just going to leave those disclaimers on the screen for you guys to read thoroughly.
I'd love that those of you who are regular attendees, if you could send us disclaimers that you see that are fun to add to our repertoire, because I've seen some really fun disclaimers, and it's a brave new world when you have to put on a beach ball. This is not a flotation device. It's I kind of believe a little bit in Darwin, but not a lot, but enough to know that maybe if you're counting on that beach ball to get you across the ocean, you might have set your hopes at the wrong place.
I feel like we've lost a lot of common sense as history has gone on. If we need to be putting those things, or I think one time you said, like, on the burrito wrapper, it said burrito is hot. Only for a certain amount of time, really. But
I saw one sign I think it was in December, while I was walking across the bridge right on the Ohio River, and it was on a cliff, and it said, "Do not mow up here on the top." And I'm like, I don't even know how they get the lawnmower up there, let alone how they would mow it. So,
was there grass?
Yeah, it was beyond me. But what are you going to do?
What are you going to do? Well, I think that's probably enough time for.
If you didn't get enough time for the disclaimer, email us and we'll send you a copy of it. How's that?
There you go.
The answer.
Well, welcome.
Happy Friday.
It's a great Friday. I'm looking forward to it. We have Eric back with us. Eric was on a little bit of vacation last week. Eric, tell us about Costa Rica.
Yeah, Costa Rica was a great experience. It was my first time out of the U.S., so it was definitely a little culture shock to me. But something I took away that was really unique was just the exchange of like currency, not USD to like their currency, but just how they, in Costa Rica, how they, use money to purchase things. And it's very cash based. And I don't carry cash anymore. I rarely ever carry cash. I know Keith always has a little somewhere, but Amanda, do you ever carry cash?
I don't.
Yeah. And it was weird because everyone had cash, and that's just what they used. They didn't use any. You could pay with credit card, but it just I really had to think about it throughout the week. And it kind of put me back on like, why don't we use cash? Is it more from a convenience point, or is it more from, it just really made me think about like why we do things differently. And it was a really good experience. I enjoyed the sunshine, the warm weather, and then I came back to a nice cold Indiana.
I think you brought some back with you. I think
I tried to pocket it up for you guys.
Wednesday was beautiful.
In 1980, so this is like, you guys got to have to read about this in your history books, but in 1980, I wrote a paper for college that said ETF, a cashless society. And so when I wrote that paper, and the people in my dormitory laughed at me that there would be a time when we have a cashless society. And now you two youngsters are laughing at me for carrying cash. So see how the tides turn?
We had talked about a cashless society as COVID was ramping up too. We had someone email us about like what we thought about that. And my perception of cash is not handheld like dollar bills. Like, I know cash will still exist in our investments, like our bank accounts are going away. But I think it was a woman who emailed us the question, "We love you, but you are in your 80s or something." And so that it's a totally different even perspective of a cashless society in like the true exchanging of a bill versus like still having cash available.
Yeah, I think I dug into my archives and showed my age when I used the term filthy lucre, which a lot of young people aren't familiar with, but it's filthy money and money because it touches everybody's hands.
Yeah.
You can pass a lot of stuff through money. But anyway, well, thanks, Eric. And Amanda, what can you tell us about the pandemic, the COVID? So,
well, speaking of COVID and cashless and the just where we stand, I don't know how to.
I'm going to navigate here. Well, we're not sharing anymore, are we? So I can close this. And
close that other one.
Here we go. Where'd it pop up? So share this. There you go. How's that?
Thank you. I appreciate your help. We haven't talked about the COVID tracker in a few weeks, and this one was from last week. Who knows if there's going to be one for this week? We had talked about, especially with other news hitting our televisions and our iPhones and newspapers. COVID might have totally died for the most part. I was just taking a peek at this morning, and two things really stuck out to me. This, if Eric, you can confirm that I am actually showing the correct map or the correct graph, but the confirmed pediatric COVID hospitalizations in California versus Florida are almost identical. And we all know that California and Florida had two very different strategies when it came to mandating and requiring masks and vaccinations and lockdowns. And now I don't know this, I didn't look into those exact sources, but California arguably has a larger population, I believe, than Florida. So, per capita might be slightly different, but Florida's hospitalizations, as far as children go, were even lower than the higher mandates. Or sorry, I did get those mixed up. They had a little more, but they essentially were the same.
I think throughout this, as we've done the show over the months, that we've pointed out that this has clearly been a disease, a sickness that's attacked the older population. And this chart over here, Amanda, this COVID deaths by age, suggests that our leadership has made poor decisions in regards to the youngsters by locking them down. When you see the dark is the percentage of population for that age group, 0 to 17, is 22.5%. And of the COVID deaths, it's 0.1% versus those 50 and older represent 25, 50, 78, about 90% of the deaths have been the older people. So to lock down the younger people has just been, in my opinion, a poor leadership by those who've made those decisions. But that's just an opinion. Hopefully I don't hurt your feelings. Our takeaway would be that we would, offer, we know that this has had an effect on those people in the high risk situations. Our thoughts and prayers go out to those people that have lost loved ones and people that maybe from the COVID have had some significant lasting impacts on their health.
Yeah. And one more thing, this little factoid right here says, study on data from Israel in the first two waves of COVID, people with a vitamin D deficiency were 14 times more likely to have a severe or critical case of COVID-19. And I looked up symptoms of vitamin D deficiencies. There aren't any. And the only thing that might present is like bone density loss. Okay. And so osteoporosis being one, which happens in ages 50 and over typically. So that correlates with this being just, again, higher risk at a higher age.
Probably suggests that you might if you haven't had a physical, get a physical and have those different vitamin levels checked out in your body, because when my mom's health was deteriorating, I think it's B19, there's a vitamin that affects your memory capabilities and sometimes can even have the perception of dementia when it's basically just a lack of vitamins in the right places. So get a blood test and see how those things line up. That's a bonus from your financial advisors. So well, let's jump into the markets here and see what's going on. And I'll get this over there soon. Here we go. That's not the one I want to show you. Here we go. Started this last summer for y'all. It's a column that shows you the number of stocks on our kind of our software to market, kind of survey the market, starting down here at 89.50 back in August, and then the number of companies whose stock price is below their 50-day moving average, 21-day moving average, and 200-day moving average. And I highlighted in yellow those moving averages when at least half of the stocks were beneath their average at that point. And then I used that, I don't know what you call that, rust color, peach?
Peach might be, that's what
peach
I like. Yeah.
Is an all new high on those particular ones. So we hit a new high in the number of stocks in our database last week, and that dropped off this week. And part of that psychological, if you're going to bring a stock public, you want to do it in a rising market. And so it looks like that either there's been some takeovers or some businesses just held off on bringing companies to the marketplace. But still, all those moving averages are beneath, or half of the stocks are beneath. And there's a little bit of improvement this week over last week. And yeah, it's still kind of treacherous out there with the war in the Ukraine. I thought I'd show you a little bit of what's going on in the markets. This is a screen of the different industries out there, and I ranked them over here in this column. Hopefully you can see where my pointer is towards the industry group that's leading. And if you pay attention to third world countries, part of the challenge there is the lack of freedom that they have limits their economic progress. And so what tends to be the case is they harvest their natural products and bring those to the market, and that's their economy. They tend to expand their economy when those precious metals and whatever resources they have are up in value. Consequently, when the markets recover and those commodities drop in value, those countries go into all kinds of chaos and turmoil because they just haven't managed their resources well. But if you look at this list, the top 10 here, we have oil, energy, oil, chemicals, oil, media, periodicals, oil, and that's the top 10. And that's not normally optimistic for a productive, active economy. Yeah. And so those are the stocks leading the 2022 stock market. And so it's just an interesting time right now when you see what's going on out there. We can take a look real quick at the NASDAQ.
Not good for our wallets either. That's the one that you don't want as a consumer. We don't like to see that either.
I was joking with Amanda that my family, that's my children and my wife and I, have a family text group, and my kids will blow it up. When something hits them, they'll blow it up. And yesterday I was traveling, and by the time it was probably mid-afternoon when I got back to Indianapolis, when I looked at my texts, I had like 50 texts, which I never have that many, and it was them blowing it up. But one of the things they were blowing up yesterday was gas prices, and it had quite a big impact this last week. We in newsletters over the last 5 years, and probably on this show, we pointed out how policies over the past decade had led the U.S. to be one of the primary producers of oil and to even have oil independence. And we've had some change in those policies, and now we are dependent on some other countries. And that's what's led to the oil increase in oil prices, in my opinion, not just the short-term things going on with Ukraine, but literally policy changes. You've seen the gas prices go up for over a year now. So, so we hit a high over here in November in the NASDAQ, and the NASDAQ hit a low right here. I put a question mark on this 13,094. There's a thing I want to talk about called a follow-through day. It had a follow-through day a few days later that suggested maybe we're going to come off of this bottom. But what happens with the market is it can't turn around until you quit having lower lows. Wow. Does that make sense? if you keep having lower lows, you're not in an uptrend. And so that's what we were looking for. You had a low right here that tested what we called the 200-day moving average there. It went up a couple days and then dropped below it. And then we hit this low right here, 13,094. We rallied a few days. We had what's called a follow-through day about 5 days after that. Couldn't hold it. The selling pressures came back in. And then earlier this week, we hit this low. We rallied off of that low this week. And today we're down about 1% or so in the NASDAQ. And so that activity is what we're watching on your behalf closely. One of the viewers suggested that I was pessimistic. I'm not pessimistic. I am just realistic about what's going on, and we want to protect your capital the best we can with the information we have available. And so as we watch this market, and as this market begins to turn back around, that's when we'll begin to deploy capital again, and we think in a much less risky situation. Our friend that was asking me about my pessimism, I said, well, the lower the stock prices go, the less pessimistic I get. It's, wow. You know, if you can buy things on sale, I would suggest you get more optimistic about your gas prices if you could buy a gallon for $2 instead of almost $4, right? So, and that's what we see going on here. But let me show you a couple things here real quick. I'm going to just show you some past market bottoms. And these things are not fun to live through. However, you all did because you're here. And so here is a bad stock market. This is the worst one in the last 20 years. I know a lot of you have the 2008 market still in memory. Do you remember that one? The 2008?
Yeah.
You do?
Yeah, I remember that one better than this one.
Yeah, this one was a bad market. This is the NASDAQ. It peaked at over 5,000 and dropped to 1,100 here. So the math roughly is greater than an 80% drop. That's a bad stock market. That would cause you to have a shiny head and less hair if you're a financial advisor, but that's a whole separate discussion. So I drew a line here to the very bottom at this 1108 and said market bottom. And this is historical. This is not predictive. This is just showing what happened. In my notes, I wrote all bull markets begin with what's called a follow-through day, and not all follow-through days lead you to a bull market. And what a follow-through day is that you quit hitting new lows. You don't have lower lows. You've hit a low, and then sometime, usually between 5 and 15 days after that low, you have a significant up day with increased volume. And so I did them, I counted the numbers here, and it's this day right here. If my cursor will cooperate with me. This day right here was October the 17th, 2002, the market was up 3.24% that day, and the volume increased over the day before. And so what you can see is once that follow-through day happened, this market went from the 1,200 level to the 1,500 level, which is a pretty substantial run in less than 60 days. That was the 2002 market where it bottomed out. The 2009 market, which is the one we were just talking about, Amanda, that one, when that one bottomed out, let me move this thing out of your way. It bottomed out here on March the 9th. And that was a very rough market. That one was a down market over a year. And the follow-through day happened on March the 17th. We had increased volume and the market was up 4.14%. And then it led to this rally that went up substantially after that. That was 2009 bottom. I'm gonna give you two more just to show you some examples here. The most recent one was the 2021. Gonna move this guy out of the way again. We bottomed out over here at the 66.30-ish level on March 23rd. And then the follow-through day came on this day right here, April the 6th. We were up 7% that day, which is a pretty substantial day. And it led to this rally that we've seen here in the last year or so. And then if we go to today and we see we're at the other side of that thing, we had this peak and we had all this selling, and that's where it probably has sounded like Keith was pessimistic. I was just pointing out that we're testing some challenging times here. And so we thought that this 13,094, we were going to say, okay, is this a bottom? If it is a bottom, we'll get a follow-through day. And we got this follow-through day right here on January 31st. We were up 3% that day. Not a huge increase in volume, just a little bit, but it couldn't hold that. And all of a sudden the selling came back in. And then, so we weren't aggressive at trying to buy through that. We hit this bottom on Monday this week. We bottomed out at 12,588, and we'll see if we get a follow-through day this next week or so. We're optimistic that we'll see a follow-through day, and how that looks will indicate whether we're ready to start buying again into the marketplace. There you have it, man. What do you think?
Bravo.
Was that too much technical information for all of you out there? I think it just tells you that this is a difficult market, yet difficult markets come to an end and they lead to great bull markets. There's no guarantee that that'll be the case in the future. It just has happened indefinitely since we've had a stock market. So that's where we are today. We remain optimistic and we remain very open to new opportunities out there. So far in the 2022 market, pretty much commodities have led the way. Mm-hmm. Yeah. And the medical stocks are starting to see some interest and curiosity in those, where they're getting a little bit of strength out there. What else, Amanda? You got anything on your mind you want to talk about?
Really, just note that you are optimistic. If anyone questions you, not pessimistic here.
Yeah. Yeah.
And I've never considered you a pessimist.
I'm optimistic too. I'm going to shout out to the Murray State Racers. They play tonight and hopefully tomorrow night. So those of you with ESPN, give the Racers a shout out. I was pessimistic in the March newsletter when you get it. I was pessimistic towards gambling. And so, if you see that, I'm not a big fan of gambling. So the things that are going on in the economy as a result of the war in Ukraine, I don't even know if you call it a war, the aggression at Ukraine. A war almost has to be two ways, I think, and it just seems like the Russians are just pummeling the Ukraine. The rate hike that I think a lot of people are expecting, half a percent rate hike this month, I think it's kind of freaked the Federal Reserve out, so that most believe we're only going to see a quarter of a percent interest rate increase this month. And we saw some optimism as well with the Supreme Court ruling against OSHA and their involvement in businesses, mandates and lack of mandates on medical things for their employees. And we at Gimbal are advocates of individual and their ability to make good decisions. We believe in caveat emptor, let the buyer beware rather than let the government beware for you. We think you're fully capable of making wise decisions. So choose wisely as you're out there. I was going to throw out a planning idea for you as well. You probably don't do a standard deduction, do you? I mean, a itemized deduction. Yeah, standard deduction. Yeah. Correct. Yeah. The tax law changes about 5 years ago, I think made 90% of the people pretty much get the standard deduction. For 2022, it's going to stand at $25,900 for married couples and $12,950 for individuals. And so the idea is, if you are in one of those situations and you think, hey, I might be able to itemize this year because you're paying a lot of interest, maybe had a lot of charitable gifts or such, is to stockpile those into 2 years rather than one. So if you get to the end of 2022 and you've had a pretty good chunk of charitable donations, maybe you pull your 2023 charitable donations that you would make next year into 2022. And there's strategies we can help you look at to consider doing that. Because if you can get more than the standard deduction this year and then take the standard deduction next year by pulling those things forward, you're going to actually save yourself money on your taxes. I'm not a tax advisor, I'm just offering suggestions that you can run by your tax advisor. Yeah. And what led me to think of that is there's a website called It's Deductible. And if you go on that website, you can type in the things that you give away to charity. Like if we gave this cup away, I can type it in there and it'll probably tell me this is a $3 deduction. I don't know what it would say, but anything you give away in the form to Goodwill or places like that, you can take those off, and that's always good towards the end of the year to make sure you get rid of that stuff. It helps declutter your house, and it helps increase your charitable donations. And again, you would want to stockpile those into the same year.
If you're taking them from your IRAs, note when you get your 1099s that it doesn't differentiate the qualified charitable distributions versus your regular distributions. So as far as I know, that's just a IRS like 1099 form rule. Like
it is
just LPL.
It's not LPL. It is the technicalities receipts behind it is that the IRS doesn't put the responsibility on the broker dealer to confirm that you actually gave it to a charity. That responsibility is on you. So when the broker dealers issue the 1099s, they don't make any judgment at all whether or not it went to a qualified charity or not. So that's what you'll have to keep your records no matter what your broker dealer is.
Yeah.
What caused me to think about this is I found this document this week, and this document is dated March 29th, 2011.
Okay.
I was the power of attorney for my parents, and one of the things I had to do was to sell their stuff.
All of it?
All of their stuff. I don't know if any of you have ever had that opportunity, but this was a 5-bedroom, 2-story house with a full basement full of stuff. And this was a Evansville area auctioneer, and it itemizes all the stuff like, I don't know, we had a flat of stainless, we had some Owens pottery, we had a Craftsman sander, and all of it, what it went to for auction, it totals it up on the back here, and the total auction value, $20,000. Everything in their house of a lifetime of 50 years of marriage, $20,000 at the auction. The auctioneer kept a cool 25% of that. So it netted out to $15,000. And I tell you all that if you have stuff that you're not touching anymore, that you can give it to the charity, stockpile your donations, and get more value out of giving it to the charity using its deductible than you're going to get, your family's going to get from the auction. So just a little bonus. I didn't go to the auction. That's probably a financial planning thing as well. As if the goal of financial planning through Gimbal is to help you live your best life, some of the things we may tell you may not include maximizing money, but helping you live your best life. And for me, part of the living my best life was to not go to the auction of my parents' stuff, because some of those things might have had sentimental ties. Yeah. And I just didn't want to see that. I just didn't need that information crossing my mind. And so I just turned it over to the auctioneers and let them do their thing.
And if you give it away, do a little marine condo as you are still alive. Just start getting rid of it, lightening your load a little bit to help your children down the road as well.
Exactly. And so there's all kinds of things you can do to streamline your finances. And I would encourage you, today is a great day. Probably not today. Well, what day is it? Sunday, you said it's going to rain?
Sunday might rain.
Yeah, Sunday's a good day. And to just find a little place where you get rid of stuff and just stock it up there for a few weeks and then make one run at a time and itemize those things. I think you'll be surprised what you have there.
And get outside tomorrow. It's supposed to be beautiful here.
Get outside, enjoy the fresh air, enjoy your family, and just make the most of it.
Toodaloo.
We'll see you guys soon.